Welcome to the BF Anderson Technical Report for July the 19th. You know, this week I was on the radio for the Jim Inkster Show, and I was really uh, perplexed by the questions we got from the listeners. And, you know, one thing we have to realize about the market, and I've said this in many past videos, that the market knows everything you could possibly think of. And so what happens is there's always something out there that isn't more than likely a negative that everybody focuses on. And so lately, you know, and from the calls we got on the radio, everybody's really focused on the tariff situation. And then the other thing people were focused on was the fact that the yield curve might invert, which meant that we would go into a recession. Which, for the yield curve to invert, you're going to have to extrapolate that it is going to invert because it hasn't inverted. But everybody's worried about it. So what I've learned over the years is that when something becomes, where everybody becomes dominant on some idea, usually it turns out to be fairly meaningless. So you can end up getting hung up on all these opinions and all these ideas, and then you miss out on investment opportunities. And I tried to point that out on the radio. So if the tariffs in the United States were really a problem, I just don't think the NASDAQ would be making an all-time new high. So here we are, we're all worried about this trade war thing. And this is, by the way, I did a box. This is year to date on the NASDAQ. And you can see we have broken out of a consolidation box. You know, we went into a correction early in the year, and then we had another correction. And so it looks like now we're pulling out of it. And do notice the NASDAQ makes a low, higher low, higher low, higher high, higher low, higher high. This is a bull market, you know, and if you get too hung up on the media and what's everyone's opinions, you're going to miss this thing. So I think it's interesting also that the S&P, I mean, if we just look at the Standard & Poor's Index, you see a similar pattern. Low, higher high, higher low, higher high, higher low, higher high. So the S&P is also breaking out of a consolidation box. But I do think it's interesting if we take this Chinese ETF, which is a large cap China fund, you can see that the Chinese fund is breaking down on the downside. So if the market discounts the future, and you kind of have to buy into that, it's telling me that, yes, there is going to be trade issues, whether it's a war or whatever, and whether they use tariffs or whatever they use. But I was listening to Larry Kudlow, who's the chief economic advisor for President Trump, and he was saying that, you know, they better get off dead center here because, you know, this could make things quite difficult for China. And their markets are all going into bear markets. So, you know, who's going to win this trade war? Who's going to win this trade dispute? So far, it looks like the United States of America to me. And, you know, this is all about our future. And, you know, I don't want to get into the, you know, the complicated nature of it, but it does look like the market is discounting that China is going to have problems if they don't come to the bargaining table and do something. They need to turn this thing around pretty quick. So let's go into the top five. Again, we're starting to continue to see medical stocks. We added several medical stocks to our portfolio in the last couple of weeks. And we think that that group is really starting to show some potential. But Biomed continues to make the list, recently hit an all-time new high, came down, tested the 50-day moving average, and is now breaking back out to the upside. Now, you know, one of the things I want to mention about 50-day moving averages, and this is nothing more than a possibility or a probability, but it seems like when you get these corrections in stocks, the institutions seem to come back in again and with new buying at the 50-day moving average. So it's always pretty healthy when you see a stock pull back, get the sellers out, and then the buyers start to come in. That's always very healthy. Now here's one here that's holding up very well called Dexcom Medical Supplies. Has not even broken really much below the 25-day moving average, has held the 25-day moving average, and is making new highs. This is a tech stock. Again, we've seen this one before. It's called Turtle Beach. They make equipment for gamers. So I'm not a gamer, but I think there's a lot of them out there. Now here is a retail stock that is doing quite well, a company called Lululemon. They make workout clothes. In fact, I buy their products. My wife buys their products. My daughter buys their products. A lot of my friends buy their products. And their products are expensive, but it's real high quality, exercise clothes. And then, the other thing I'm hearing too is that in cities like New York and various places, women are now dressing in their yoga clothes as a daily routine versus just going to yoga. So, Lululemon holding up real well, held the 25-day. Keep an eye on it. I think it looks pretty good. This is an e-commerce company called Wix. They're an Israeli company. Pretty much the basic business is they provide web pages for companies that want to have an e-commerce store. So, big demand for this. Shopify's in this business. There's a Chinese company called Baozun that's in this business. It's definitely looking good. Just recently hit a new high, holding 25-day moving average. So in conclusion, what I'm saying is don't get too hung up on things. Listen to the market. The market's going to tell you because the market discounts the future. So if you have any questions, give me a call. Thank you very much.